been a very busy day right here at the exchange, and I can tell you that we've got yet another listing that took place, and that is Sygnia Asset Management. Joining us at the desk is the Chief Executive, a female Chief Executive, so incredibly happy about that. Magda Wierzycka is with us. Of course, Byron Lotter still stays with us. Magda, congratulations on your listing. We were saying just a few moments ago off air that the response that you got has been overwhelming. You didn't expect it to do so well. Just tell us at what price you had put down and what you came in, or the opening price was, and the rationale. Why did you decide to do it right now?
Well, so the offer price was R8.40 a share, and I think it opened at R13.56 a share, which obviously is, absolutely amazing from our perspective. We are completely blown away by the level of interest in our business model, and our business model is one of low-cost index tracking, and it's something we want to take out to the South African market, both the institutional market and the retail market, and regulators are very supportive of the idea of index tracking generally, so I think we've launched our index tracking products at the right time. And the listing really is a function of the fact that we need the brand building and the publicity around index tracking and around Sygnia in particular. So we are well known in the institutional market, not very well known in the retail market, and certainly listings and being listed, being visible, being spoken to, interviewed helps tremendously with profile. And that really was the main idea behind this listing. But now that we can see how much capital there is and how much money we can raise, it means that we're going to start thinking much bigger. And our plans are shifting as we speak.
Ah, okay.
Well, like you say, plans are shifting, and now you've got access to a lot more capital. Going forward, we've seen the likes of Anchor Capital use their listing to be able to raise more and more money and acquire more assets. Are you looking to possibly acquire more assets, looking to buy smaller businesses, or is it more just creating a better profile and getting inflows into the existing business?
Definitely the latter. I mean, we are an organically grown business, and to date we haven't acquired anything. I think if we were to move into the acquisition space, we would only do so under very specific circumstances to create critical mass in particular product range that we want to launch. And in particular, I'm talking about umbrella funds and the retirement fund market. But we are not really an acquisition-driven company. We are an organic growth-driven company. I think we've got a huge amount of scope for growth. Index tracking, in particular in South Africa, is very unrepresented, both in retail and institutional portfolios. So even if over the next 5 years we capture 10 to 20% of the savings market in South Africa, that's a huge rand-cent amount of money. So we don't think we need to buy assets, as Anchor is doing, but we are very different businesses. We have very different business philosophies. I know people tend to compare us to Anchor just because of the timelines of the listing, but I need to emphasize we are a very, very different business.
You said that index tracking has definitely taken off in South Africa. Maybe just give us a sense of where you see it going in the next couple of years. And you mentioned regulators. I mean, there's a huge drive to make sure that the consumer is well protected. You are targeting retail investors with the management fees and asset managers. How are you going to be balancing those? Is this a worry to you at all?
No, they're not a worry to me. They're actually a great opportunity to me. When we entered the retail market about 18 months ago, we launched a whole range of savings products, so retirement annuities, living annuities, preservation funds, linked to our index tracking funds. And we did so at 0.4% per annum, and that includes VAT. So that really is a fairly revolutionary pricing in the retail industry, where you start off at 1.2% and then you just go up. But as it stands at the moment, index tracking is virtually unknown in South Africa, and it's a drop in the ocean in terms of strategies that are being used by investors. And the interesting thing is, we've just come out of literally a decade where active asset managers have significantly underperformed all market index benchmarks. So your market index type tracking proposition offers not only the low cost, but it also offers superior returns. It's just that it hasn't been made particularly visible to the retail institutional market. And the National Treasury just recently came out with draft regulation that touches pension funds. And literally it says that pension fund trustees have to consider index tracking in designing their default investment strategies. So really it couldn't have been better timing if I timed it myself. And I think that there's huge room for growth.
So thank you so much for coming in. Congratulations on your listing. Looking forward to having you more in studio. That was Magda Wierzycka, Chief Executive of Sygnia.